The COVID-19 outbreak, now a pandemic according to the WHO, is rapidly evolving into a human tragedy, disrupting economic activity in a wide swath of affected countries. Financial markets across the world are experiencing intense volatility and financial conditions have tightened worldwide. Policy authorities have responded with emergency measures, and more recently, advanced economies have coordinated large policy rate reductions with activation of swap lines as well as quantitative and credit easing. Tentative estimates of consequent loss of global growth are currently placed in the range of 0.4 to 1.5%. Already sectors such as tourism, airlines, the hospitality industry and domestic trade and transport are suffering a loss of activity. More immediately, spillovers are being transmitted through finance and confidence channels to overseas and domestic equity markets. Forex and bond markets are also not immune to the current volatile conditions. There is considerable uncertainty about the duration of the pandemic, and the currently available estimates of its adverse effects will undergo sizable revisions if this coronavirus persists longer or if it gets contained much earlier than currently believed. The lack of response to our 7-day repo auction of rupees 25,000 crore, which was conducted on March 13th, has reassured us that domestic liquidity conditions remain comfortable. It is important that policy space is used appropriately and is suitably timed to optimize its impact. The RBI has several instruments at its command and stands ready. I repeat, the RBI has several policy instruments at its command and stands ready to take all necessary measures to ensure that the effects of COVID-19 pandemic on the Indian economy are mitigated and financial markets and institutions in India continue to function normally. The level of forex reserves, as you would be aware, remains comfortable to meet any exigency. Based on the current evaluation of domestic financial conditions, I propose to announce the following two measures. 1. Taking into account the favorable response to the sale-buy swap auctions conducted today and the evolving financial market conditions, we propose to conduct another 6 months US dollar sell-buy swap on March 23rd to provide liquidity to the foreign exchange market. The details of this are being notified separately. 2. In order to counterbalance the domestic liquidity effects of the swap and to further improve monetary transmission, I repeat, in order to counterbalance the domestic liquidity effects of the swap and to further improve monetary transmission, the RBI will conduct long-term repo operations (LTRO) in multiple tranches of appropriate sizes up to a total amount of rupees 1 lakh crores at the policy, and this will be done at the policy rate. This will be followed by a review of the performance of our LTRO. Details relating to LTROs are being announced separately. As you are aware, the RBI and the government together, we are giving lot of emphasis on in encouraging digital payments, and over a period of time various measures have been taken to establish safe, secure, affordable retail payment systems like the NEFT. We have also advised the banks in a circular which we have issued some little while ago today to encourage more and more of digital payments. RBI has several policy instruments at its disposal. We will use the various policy instruments from time to time depending on requirement, and our response will be calibrated. Our effort is to see that our responses are neither premature nor delayed. We will make every effort to see that whatever instrument or whatever announcements, policy announcements we make, they do have the desired effect, they do have optimum impact.